Alright, so the other day I posted a video and I was talking about a line of credit, and a handful of people hit me up and was like, well, I didn't really understand what you were saying, or, can you break it down a little bit better? So the easiest way to break down the idea of what a line of credit is it's like a credit card, right? Where you can go into the bank and you can tell me when to establish a line of credit. First, there's two ways to do it. You can have an unsecured and you can have a secured line of credit. With an unsecured line of credit, that's gonna go off of things like your credit score, your debt to ratio, and your income. Now, you can also do a secured line of credit, and that's more so in the real estate world, where you can use some collateral, like i.e. a house, and you can establish a line of credit using that as collateral for the line of credit. So what the line of credit is, it's basically like a credit card with a low interest rate that you only have to pay interest on. So if you pull out $50,000, you only have to pay the interest amount. You don't actually have to pay the payment part of that $50,000, but they do want you to pay it off relatively soon. So what that means is you could pull $50,000 out and your bill might only be $100 a month of interest, right? Depending on what your interest rate are. Usually they go with the housing market, so it might be like a 8% interest rate on your line of credit on a secure. Maybe different on unsecured. So what that means is now you could pull the money out and you could use that money to purchase a property. And then you could play around with it, and then let's say you need to do some repairs, right? You could do your repairs, and as you're doing your repairs, you only got that low monthly payment because it's interest only. So another homie hit me up and was like, man, I got this deed to the house. What's the quickest way to pull out money from this house? So I had to let him know it's two different ways you could do it. If you don't mind carrying an actual mortgage loan, then what you would do is you would just refinance the whole house. So you refinance the whole house, you go through the same like closing costs and stuff like that are involved, or we can go back to what I was just talking about with the line of credit, and you can pull money out as much as you need whenever you want to, and you can have it sitting there and use that to build up your portfolio. And it really just depends on whatever your goals are. So hopefully this video will kind of give you a better idea on the idea of what establishing a line of credit is and what it looks like and how to work it in your favor so that you can get your first property and, even one of the other, or it could be your second property or your first investment property rather, right? So my mentee actually had hit me up and asked me the same thing. And he was like, man, well, I don't have anything paid off, but I do have equity in my house. And I'm like, okay, well, you could use that equity that's in your house, and it's called a HELOC. And that's just basically a home equity line of credit. And what they do is they basically establish that same open end off of the idea of whatever you have left in or available for your money. Let's break it down, right? So you have a $100,000 house and you only owe $50,000 on it. Now, what the banks will do, they'll give you 70 to 80% of the value of your home, right? So with that being said, let's just go with 80% is what they're gonna give you on the HELOC. That'd be 80% of the value. The value of the house was 100,000, so you only owe 50. The leftover remaining, if they're gonna do 80, will be 30,000. You'll be able to establish that line of credit, and you'll have an open line of credit of $30,000 if they're gonna do the 80%. So that's just, I just want to clear that up so people can have a better understanding of what I was trying to say as far as that one property purchase and how everything went. So hopefully this helps you out a little bit. I know some people may have had that same question since a lot of people asked me, and I was like, well, you know what? Maybe everybody else isn't really, don't know me like that to ask me. So I figured I'd just give a video to where you can have a basic understanding of, or a deeper understanding of how it works. So yeah, check it out. You know what I'm saying? Run the play. Talking Money Playbook coming soon. Get it?